Growing wine grapes is risky. In recent years, the threat of damaging fires and the smoke created has made delivering a marketable crop even more challenging. To address this risk, consider adding Fire Insurance Protection Smoke Index, or FIP-SI, to your wine grape multi-peril crop insurance policy. When added, this endorsement covers a portion of the deductible of your wine grape policy when your insured county experiences a minimum number of smoke events. Currently, it is available in most wine grape growing counties in the state. Smoke Index endorsement can be purchased in conjunction with the entry-level catastrophic, or CAT, coverage. To be eligible for the Smoke Index endorsement, you must have an MPCI grape policy with the same insurance provider. Choose this endorsement and the coverage percentage before the policy sales closing date. FIP-SI uses the grape policy's acreage report. The same insurable acres will automatically apply to the underlying policy and this endorsement. In California, each variety is considered to be a separate crop policy. You may elect FIP-SI coverage by each grape variety in each county. Accordingly, a premium and administrative fee is charged for each variety on the policy and for each Smoke Index endorsement that is attached. What's covered and how's it work? FIP-SI provides protection against widespread smoke loss in a county when the number of smoke events meets or exceeds the county loss trigger. The Federal Crop Insurance Corporation, or FCIC, will determine the cumulative smoke events for each county for the insurance period beginning June 1 and ending November 10. Smoke Index data comes from the NOAA's Hazard Mapping System, or HMS, which monitors active fire and smoke information over North America using satellite observations and image analysis. Smoke density is analyzed and graded. Heavy smoke plumes are identified, and FIP-SI will utilize this data. The county loss trigger is the minimum number of cumulative smoke events that must occur during the insurance period to trigger an indemnity payment. In addition, indemnity payments may increase as the cumulative number of smoke events exceed the county loss trigger. The payment factor in the actuarial documents is used to calculate the indemnity payment due to the insured. Triggered counties will be determined after the end of the insurance period. An insured is not required to file a notice of loss or submit additional documentation under this endorsement. However, requirements to file a notice of loss and all other requirements remain in place for the underlying policy. Individual farm yields and revenues are not considered under the Smoke Index. It is possible that an insured may experience reduced yield and revenue and not receive an indemnity under the Smoke Index. Likewise, producers may receive an indemnity under this endorsement, but not their grape policy. Premiums for the Smoke Index endorsement are affordable, as it is subsidized by the USDA. At Golden Pacific Crop Insurance, our agents have over 2 decades of experience in crop insurance, and we still farm our own grapes as well. As specialists in grapevine and grape insurance coverage, we can easily explain and tailor this important risk management tool into something easy for you to use. Call us at 559-825-CROP-2767 or by email at dfino@goldenpacificcrop.com.